Sarah Eisen joins us now with a first on CNBC interview with the chairman and CEO of Bank of America, Brian Moynihan. Sarah?
Scott, thank you. Brian, thank you for joining us. I first just have to ask if you're surprised by the market reaction, because the numbers mostly were better than expected with a big pop in trading as well.
Well, we had a great quarter here at Bank of America, exceeding the expectations. And, well, one day's market, is, I always tell myself, you can feel good or bad on that day. But the job for us is to drive the things we control and continue to produce for the shareholders. We got 14% return on tangible common equity this quarter. And, you know, if people are selling the stock, we'll be buying it back and at lower prices today than we thought we would be buying it back. But let's wait till tomorrow and see what happens.
All right, that's an expression of confidence. You did reiterate guidance, and the market, I guess, had higher hopes. We saw this with Wells and JP Morgan as well, that higher for longer would be better for net interest income outlook and profitability. So what are you expecting on that front?
Well, we basically told people that for the first quarter of 24, we had told them at the time we did earnings for the fourth quarter last year that we would actually be down a little bit linked quarter. We actually turned out to be up linked quarter, up 100 million, which was 300 million, 250, 300 million to the upside. We then said you can kind of lock that in. So the second quarter for us always comes down a little bit from the first quarter. We said you can lock that in and it'll grow from then on out, which is a different path than other people have. And that's because the power of our deposit base. Our deposits are growing. Our loan growth is still muted because the economy is still adjusting to all the things that your colleagues have been talking about all day. And so we saw loan growth year over year, but linked quarter loans were down a little bit due to the seasonality of credit cards. Credit quality is still good. So we feel good about what we're doing. But the key on NII is that we actually had more than we thought we were going to have. We expect to have more than we thought we were going to have next quarter, and it grows from there and frankly starts to get to the point where it's net growth year over year for the company.
So what about the consumer? Because you have some pretty good visibility into people's deposits and their credit card spending. Is it doing better? Is it doing worse? Is it the same?
Well, if you look in the spending data for our consumers, you have to put a little bit in historical context. So at Bank of America, we have the honor of serving 60 million U.S. consumers, and we see what goes in and out of their accounts on a daily, weekly, monthly basis. And if you think about if we were sitting here last year or a year and a half ago, we were talking about consumer spending being very strong. A lot of people were saying, well, the consumer is going to run out of money. Didn't happen. The consumer was going to over-leverage. Did not happen. The consumer wage growth was not going to keep up inflation. It didn't happen back then. But what did happen as you move forward from that standpoint is the consumer has slowed down their spending. So we went from a 10% year-over-year growth early last year to 5% last fall. And now they're running about 5%, a little less than that in March, April a little stronger. And what that means, that growth and movement of money across $4.5 trillion on an annual basis out of the Bank of America accounts is consistent where we were in 17, 18, 19 when the Fed had raised rates, lower inflation, 2%-ish type growth economy. So you're seeing the consumer hang in there and continue to spend, but spend at a level that's more consistent with a more trend type of economy. And we'll see all it play out over the sense of the next quarter.
What about what Chair Powell just said on inflation this afternoon? He said recent data have clearly not given us greater confidence that inflation is coming under control. Based on everything you see from how consumers are dealing and also how businesses are passing it on, how do you assess inflation and the path down to 2%?
Well, if you look at our research team, which is the best in the world, what they've done is just constantly pushed out the effects of the Fed tightening before that and other things. So originally, 18 months ago, they had a recession plan for the last part of last year, early part of this year. Then they pushed it out into the early part of this year. Then they said it's not a recession, it's soft landing. And now they say it's basically continued with trend economic growth. So you had a 4% plus growth rate in the third quarter, 3% in the fourth quarter last year, and now they're saying it's going to be 2.5% this quarter. That reflects just the ongoing attributes of the consumer being solid, businesses making money, unemployment staying low. They have unemployment not getting up to above 4% until the end of 25. Originally, they had it this year. All that is just sort of pushing out the impacts because I think the debate's going on, and you're talking about it every day, and we're Fed watching way too much right now. The reality is that issue is that the Fed has put a huge constraint on economic growth due to the massive stimulus in response to the crisis and the lowering of rates and the things that went on. It is still having an effect. You've seen the economy slow down even from the third quarter last year to fourth quarter, but it's taking longer than they think. And those experts say it takes about 4 years to wind out of inflation. And so while the Fed has a plenipotent power to make the decision, they don't have the power to decide what the facts are. And so at the end of the day, the facts are going along based on a solid economy, okay, and not moving as fast as some people might have thought. And that is the day-to-day impact on 3 cuts, 4 cuts, 7 cuts, 2 cuts. So, at the end of the day, our company will operate well in any environment.